Okay, so here is the latest market fact pack from All Homes for August 2024. I'm just going to go through some information in here that may be relevant to you if you own a property or are looking to sell a property, or if you own a property that is currently being managed. So this insight here is that there is 3% increase in total new listings year on year for August 2024. And so that is, not a huge amount. It's sort of tracking in comparison to the dotted line here. It's tracking in very similar fashion to stock levels as last year. So that's normal. And then the total new listings is up by 10.4%. So a little bit more stock on the market. So that means that the volume of listings coming on the market, therefore choice from buyers, is around about the same. Slightly less rentals coming onto the market. So this this graph here is the one that is fairly interesting because there's about 30% more live sale listings on the market. So what that means is that there are a lot of properties that are sitting on the market that are not selling, and there's about 28.9% of those that are just sitting on the market. There's always more properties coming to the market, but it's just that they're not selling as quickly as they were when we look. And so it's only increased like month on month by 2.5%, but year versus year, so August last year, there's 28.9% more stock sitting on the market. With rentals, there's 4.3% more year on year. And then 4%. So these are marginal. That's not really making any kind of a difference. Clearance rates. Look, I'm not a massive fan of clearance rates, as you know, but clearance rates in August 24 are sitting around 59.1%, which is up about 4.2 basis points, around 1.6 down from year on year, with 336 sales being sold via auction. Now, um, clearance rates in Canberra, they're a bit of a skewed number because if the data isn't reported, then it's not calculated in a clearance rate, and that property probably didn't sell. So the clearance rate's probably a lot lower than 59%, but it's just a generic, it's just a number to report upon. Basically, it makes it pretty easy for news outlets to say the market's good or bad. Now, Belconnen clearance rate is 56%, same as Tuggeranong, which is unusual. So normally the Tuggeranong clearance rate is a bit lower than the Belconnen clearance rate. But you can see here the Western Creek area is quite high as a clearance rate. But again, if there's only been 4 sales via auction in Western Creek, and each of those and 3 out of 4 of those sales sold, therefore you're going to have a higher clearance rate. But if there is a lot more volume in Belconnen, their clearance rate could be significantly lower. So don't look too deep into the clearance rates that are currently reported here. So this is a graph showing how many properties are being sold or listed as private treaty versus auction. And so the dark red is private treaty sales and auction, and light red and light blue is this time last year. And so here in August, there are more. There's been an increase in properties going to auction versus this time last year, whereas in the previous months, year on year, it was a very similar amount of properties that were being advertised for auction or for private treaty, say offers over. So a little bit of an increase in August for more properties going to auction. Generally, that would indicate it's because there is a little bit more confidence in the marketplace at the moment, and so there is, at the moment we're talking to our sellers and we're recommending an auction because we are getting auction results. The days on market. So days on market in August 2024 are 61. Last month they were 63. Last year in August 57. The slowest market was 90 days, which was COVID market, and the lowest point was in November 2021, 23 days on market. So look, we're sitting at around 60 days on market. That's about where property days on market generally sit, unless there's a pandemic. So you can see that here with the interest rates, when interest rates start to tick up, as interest rates go up, typically we'll find days on market also go up because buyers just need to adjust their expectations, and while they do so and consider their position, it does take a little bit longer for properties to sell. Days on market for units, they've also seen an increase, and that is pretty standard for units. So units do take a lot longer than a house to sell. So it's a 4-month high for days on market for units, but it's not significant. So days on market in the districts is here in Belconnen 60 days, Gungahlin 65, 59, South Canberra 109 days on market, and the Woden Valley 110 days on market. They're quite significant days on market. That's basically 4 months, which is a really long time. But some of these larger sales in these locations can take a bit longer than your standard $750,000 sales. Vacancy rate. So Sydney's 1.2%. Canberra's vacancy rate is at a one. It's fairly high at 1.7% in comparison to how low it was a couple of years ago, but it's still 1.7%. It's not a high vacancy rate. Canberra's 1.1 distressed listings. So this is uh, basically a distressed listing is the um, So basically, what All Homes does is it analyzes the listings that are on their portal, and it works out which ones are distressed. Distressed might have words in the title such as keen to sell, distressed sale, urgent sale, vendor wants to see offers, that kind of stuff. And they look for those sorts of things, and they would then tag that or flag that as a distressed sale. And so they're saying that in August 2024, there's about 1.1% of those in the marketplace versus July 2024, 1.4%. Again, these are very, very low numbers. You can see here in Brisbane, you've got a much higher percentage there, and with a greater amount of stock on the market, that is a significantly distressed market in comparison to Canberra. Here it'll show you in the district, so in Belconnen versus Gungahlin, for example, but again, these are very low percentages. So sale discounting. Sale discounting it's basically it. All Homes is looking at the originally advertised price, say 700, and then if the price was adjusted down to say $670,000, it's just showing how many of the listings on site are discounting their prices. So 4.8%. Now you can see again with this interest rate rises here, you can see that sale discounting obviously increased because that was the whole reason behind lifting interest rates was to try and pull prices back, and now sale discounting is sort of trending down again, which is kind of giving a little bit, which is indicating a little bit more confidence in the marketplace. And also, it's much easier at the moment for us to establish a particular sale. It's a lot easier for us in the marketplace at the moment to estimate a final sale price than it was during the COVID period when prices were out of control. So it's a little bit easier at the moment to predict. Discounting in the district, so Belconnen's seen quite a large percentage of listings discounting, but nowhere near as much as say South Canberra and Woden Valley. Again, because these premier areas where they have much higher average sale prices, there is a lot more wriggle room on sale price than there is in Belconnen, where your average sale price might be $850,000. There's not much room to move, whereas in South Canberra, we're talking like $2 and $3 million properties. So if they discount by a little bit, it's still a saleable property. So this here is interesting, I guess. So we've got Canberra house prices are back on the rise, increasing by almost $9,000. Now, that's not huge, but that is in the right direction for homeowners, and it's a sustainable rate of growth, which means that we're not going to get back into bubble territory like we did in the COVID period. So I like this graph here because I feel this really gives you a good overview of the Canberra prices, Canberra capital growth over the long term. So let me just demonstrate. When people say to you Canberra prices are Canberra never goes down, well, since 2020, Canberra prices were pretty stable. You can see, you can almost draw a straight line through that. You've got a little bit of fluctuation, but nothing that's too out of control, up and down a few percent here or there. But then, of course, we hit we hit COVID, and then interest rates dropped down to emergency level lows, and then because of interest rates go down, prices go up, and then we got to a peak market in about June 2022, and then interest rates started to increase on a monthly basis, and then because of that, we had this price correction, and so we did see a capital growth from here to here of around about 40%. Now it's come off the top of that 40% growth, it's come back down by about 15%. But if you continue this line through, and this is what I sort of say to people, that if this line was to continue through, you're still, as a homeowner, you're still this much better off thanks to COVID, because this is probably where prices should have been without COVID. But if you sold here, perfect. But if you were buying and selling in that same kind of market, then you're paying the same price for what you sold for might have been really good, but what you're buying for is also quite high at that point in time. So we're back now, back to kind of close to where prices should be if there was no COVID period of time for those couple of years. So if we can go back to these fairly consistent long-term growth patterns, then Canberra will be a nice, slow, steady place to invest your money. You're not going to see a huge amount of capital growth in the short period of time, but over a long period of time, it is a safe investment area. So you can see here that prices have increased by 0.8%. Unit prices have also increased by 1.8%, and this price gap is quite large. So the price gap between apartments and a house is 74.75%, which is huge. And you can see here this price gap prior to COVID in 2019 was a lot less than it is right now. So rents. So house rents have risen for the third consecutive quarter, and so we're back to a record of 690 per week, which was seen back in December 2022. Now, obviously, with houses or the cost of owning a house or an apartment with interest rates and everything else the way they are at the moment, you need to get high rents to be able to afford to keep the property. With the changes that are in place with the Tenancy Act, it's really hard to increase rents now, and so it is making it challenging for investors to maximize their rental returns without basically reletting the property and re-advertising it at a higher rate. But yeah, look, you have to get decent rent for your property, otherwise you cannot afford to hold on to it. And so it's good news that rental prices for investors are increasing. They need to, otherwise there will be no investors in the marketplace, and therefore there won't be any accommodation for the tenants. So rental yields has also increased a little bit, but again, we're not talking big double digits here. We're talking fractions, or small percentage, 1% here or there. Okay, so that's basically it. So we saw an increase in number of new listings coming to market, which is good. Things are starting to warm up again. We saw a slight increase in prices. We've seen a slight increase in clearance rates. The days on market have come down a little bit as well. Distressed listings have come down a little bit. House prices are slightly on the rise by 0.8%, which is in the right direction. House rents also rose. Unit rents softened by about 1.8%, but that is simply because there are a lot of units available. And so yields are up slightly. So overall, the market is the market, but it's not. It's basically what I'm calling a little bit of a sideways market at the moment. So there's no doom and gloom. There's no get excited. It's nice and stable, and that's what you want. and then it could be a really good time to start to grow your portfolio. It could be a really good time to now look at doing some renovations to your home, because that is going to increase its value because you're going to manufacture that capital growth. But yeah, overall the marketplace is in a pretty good place. We have been really active ourselves, and we've sold a lot of property in the last couple of months. Winter was really busy for us, and we found that there were like not a huge amount of buyers in the actual marketplace. However, the buyers that were in the marketplace were ready to purchase, and we were able to get quite a few sales across the line, a lot before auction. So just in the last 8 weeks, we've sold 13, 14 properties. That one we're about to mark another one is sold now, and then yeah, we've currently got 14 properties for sale. If you are an investor and you're looking for an investment property, we've got a couple of options like 131 and 161 Mortimer Lewis. We've got this one here in Constitution Avenue, Campbell, would be a good investment property. Flemington Road is a really affordable 222. It's one of the most, I think it probably is the most affordable two-bedroom in the marketplace at the moment. Chandler Street, we've got two in Chandler Street that are really priced quite well. Furzer Street, this is an Airbnb getting good returns. So there's a bit of investment stock there if you're looking to buy an investment property now. This one here was just sold today, for example, but it's got a cooling off period, and that's why you see it as under offer. But yeah, good time to do anything in the property market because things are pretty stable. As always, if you have any questions or you'd like to know specifics about your property, your portfolio, or if there's anything we can do to help you in the marketplace, reach out and we'd be more than happy to help.